You think you're investing, but you're actually gambling with data you don't understand or chasing returns that don't exist. Today, we are sitting down with someone who lost 80% of his wealth when he first started investing, and then went on to build a wealth management firm which manages thousands of crores. Deepak Shenoy is the founder of Capitalmind, the CEO of India's latest quantitative mutual fund, and the author of Money Wise. Hi Deepak, thank you so much for gracing us with your presence.
Thanks, Deshna. Glad to be here. Happy to speak. I think we just heard about my film portfolio. I'm very excited to try it out as well.
Thank you. All right. So Deepak, the first question that comes to mind, right? Most fund managers start with their sanitized success stories and how they've achieved a lot. Contrary to how you started, when I first read about your profile, and the first thing that stood out to me was how publicly you acknowledged the 80% loss that you made in your first investment, right? Would you want to walk us through that journey of yours?
Oh yeah, of course. I think everybody has to go through. There's no such thing as understanding winners without understanding losers, right? So I was talking to someone earlier also today about the same thing, about how I invested in this ICICI technology fund in 2000. I was running a tech company in Malleshwaram at that time, and then my partner and I both decided we should put our money into technology in the peak of the IT.com kind of bull run during 1999-2000. In 2000 February was when this fund launched, and I remember we both went somewhere, stood in line. At that time, NFO was called an IPO, and the IPO was subscribe within the 15 days, give a check and all that. So you had to give this check to, and there was no direct plans, there was only regular plans. So you could only give it as a check, and there was a 2.25% entry loan. So if I invested 10,000, only 9,725 rupees or 75 rupees was getting invested. And the rest was, it was like, within 6 months or 8 months, it was down to 2 rupees per share on the NAV. So I had lost 8,000 rupees on a 10,000 rupee investment. And I had invested privately because we were like sick of watching all the shares go up everywhere. I remember there was a time when one of these IT companies announced a bonus and the price doubled just because they announced a bonus. I think Wipro stock price is even below the high of 2000 at this point, which means 26 years later, you're still below the price at which you might have bought in 2000. So to that extent, the investment was a terrible idea, but I learned something. I didn't get out at 2 rupees. After I think 10 years, I got out at 10 rupees back again. But it was a lesson that I learned, that was don't chase. Well, I don't know if I learned it, but the idea is to understand when trends are at an extreme, and to have an exit strategy that is more linear rather than waiting for an 80% loss.
Absolutely. I think thanks for sharing that. It was for you to acknowledge it and share that story. It really helps people like me who are just learning about investing and starting off their journeys. You went from being a tech entrepreneur building an accounting software to becoming a wealth manager, right? This is usually not the most common path, but I'd love to understand what's your thought process behind this journey. What motivates you?
Oh yeah, I think most career paths are overrated because सच बताओ तो क्या फर्क पड़ता है what you study, and eventually think about it. The guys who founded Flipkart are essentially selling t-shirts and electronic goods, like a shop online, but they got IIT degrees, right? So at what point do you become a shopkeeper from an IIT degree? People who are running really high-end deep tech companies probably have no educational background that even relates close to it. So I think career shifts are underrated in the sense कि मतलब they are not underrated, but I think they're overrated. बहुत कुछ होता है. People change their careers all the time, and while there are a lot of engineers in finance now, it is also the case that there are not a lot of people who become finance professionals from lots of other fields, not just engineering. So people who have studied accounts at some level, people who studied marketing at another level. I think MBAs to a large extent gravitate towards finance because the money is here. A lot of money is here at least. And there's money in consulting. So it's not so much that the career has changed, but there's something about, finding the right kind of passion to do. I like writing. I've written a lot even about the tech industry when I was a tech guy, and I like analyzing things which I think is there in the tech world and in the financial world. We use technology and data a lot, even in the finance world. Relatively easy to bridge now because I have an engineering background, but the quality of data, the way you analyze it, the statistical problems that go around with analyzing data, the technological problems that go around with handling data, ये वाले parts जो है जो normally अगर आप किसी finance वाले को बोलो they find it threatening, I don't find it threatening. So you tell me कि ये data API से आ रहा है, I'll be like fine, ठीक है, API से आ रहा है तो 2 मिनट में लग जाएगा, ये I can convert it to an Excel sheet, a JSON or whatever. But and the same thing if you're telling me as a tech guy कि ये financial ये है, now it's much easier to absorb because I understand the financial world of things. So it's not like I've immediately changed my career. I'm still doing a lot of tech. Now we're using AI in finance as well, in asset management and in building compliance solutions as well. But we're no longer just tech and we're no longer just finance. So it's a bit of a battle that way. लेकिन ये थोड़ा सा ग्लैमराइज हो जाता है unnecessarily कि यार इंजीनियर है, इंजीनियर से पता नहीं कुछ और बन गया, कैसे बना. I think बना जा सकता है, but इसको you just have to forgo the monthly salary. एक बार आपने कर दिया वो फिर ठीक है, फिर आप जो भी आप चाहे कर सकते हो because you're in that zone of saying I can build a career out of anything if I'm not dependent on this salary to meet my monthly payments and all that stuff. So if you buy a house too early, you have EMI, आप नहीं कर सकते. आपको जॉब चेंज करना मतलब मुश्किल ही लगेगा क्योंकि आप EMI कहाँ से भरोगे.
Right.
लेकिन अगर आपके पास थोड़ा freedom है, then you have the choice to choose careers. I was lucky enough to have that freedom.
Fair, absolutely. Very interesting perspective and very practical points, All right, let's, before we get to busting a few myths, right, I thought let's align on a few foundational concepts so that everyone hearing in is also on the same page. What do we mean by quantitative models? Could you please explain to me as though I'm not a finance person?
Perfect, ठीक है. Okay, so I usually use sports analogies for this क्योंकि it's the most well known of almost everything. So you're watching the cricket World Cup, or you're watching football, or you're watching Formula 1. आपको पता है कि there are some famous personalities. Everybody knows these famous personalities, whether it's like a Virat Kohli at some point, a Sachin Tendulkar at some other point. Today there may be a Hardik Pandya and a bunch of people. It is possible that if you ask me to select a bunch of people that would do well, I will choose the famous people. Because Hardik Pandya is in form, or Abhishek Sharma is in form, or जो भी है, मैं उनको चूज करूंगा क्योंकि मैं उनको जानता हूँ और मैंने उन्हें देखा है. I have seen them over years or whatever it is. And then I'll choose these people. I'll choose a Kohli, I'll choose a Dravid at one point in time and all that. Because I know them. This is like fundamental investing. I know a company, that's why I buy, right? So I know a company, I've read a lot about it, I've studied, I've seen, I have some subjective analysis कि boss यहाँ पे ना द्राविड अच्छा खेलेगा, यहाँ पे ये अच्छा खेलेगा, and things like that. Whereas there's this other guy who's not very cricket fond, Formula 1 fond or whatever. तो पता नहीं है perfectly कि क्या है, so he's looking at it purely from a data perspective. तो डेटा दिखता कहता है यार मतलब ऐसे ग्राउंड्स में you're going to need some types of players who because it's a larger ground, who hit along the ground. People who are more technical in their play versus flashy and trying to hit the sixes all over the place. So the attributes that will succeed in a particular type of tournament, maybe players who play well on wet grounds where there's a lot of dew in the evening, or when they're good fielders, they're bad fielders. So these are the characteristics of a team. Now, I want to build a team which has a certain amount of fielding strength, a certain amount of batting strength, a certain amount of bowling strength. Formula One, I want to build a team that has good skills in wet weather, can retain tires, because tires की ज़रूरत होती है कि if I have to change my tires 3 times instead of 2, I have a 20-second lag, and the 20-second lag is a difference between the first and the 7th place. So I want a guy who can manage his tires well. Yeah. Or I want a team that can collectively manage the tires well, right? Mm-hmm. So I want to choose a team that has characteristics rather than individual names. I might find that my team has some of the famous players if I looked at just their characteristics, and I may have some of unknown players because they're mixing. Once I put in 2 or 3 players, I'll say, okay, I'm now very strong on tires, but I'm very weak on wet weather. So you find a wet weather driver to come and meet that skill in your team, right? So you might find that some of these drivers are not the natural picks, not the best picks that you have. Then within the constraints that you have, it changes things. So I'm looking at characteristics, not drivers. And I just continue to play by picking the best characteristics, no matter which drivers meet those characteristics. And over time, those characteristics change because एक race के बाद हर driver का overtaking skill will be updated. Does he crash out wala skill will be updated. All that stuff. Same thing with cricket. After they play a match, if a good player scores a duck, then their average goes down, and some other player the average may go up. So you recalculate after every game, and then you figure out who's your next team, who's your next best team. Quantitative is just the way that says I don't want to select a company because I've met its management, I like the body language of the promoter. ये वाला जो subjective element नहीं है. अब कुछ चाहिए जो डेटा में है. अब डेटा क्या हो सकता है कि अच्छा earnings growth बहुत strong है compared to the rest of the universe. या फिर इसका quality of earnings is very high. You can define the quality. Quality of earnings is higher if the company has low debt, high return on capital employed, high return on equity. I want to buy that company. So I rank every company with respect to the quality of earnings. And then I say that I want the highest quality companies to be in my portfolio.
Right.
Same thing I would say. So what are these things, these attributes? They are called factors. So one way to look at them is quality is a factor. There is something else that's a factor, such as value. Value is how much price am I paying per rupee of earnings or per rupee of book value. The lowest price I'm paying is the highest ranked in my portfolio.
Right.
So then I choose the lowest, the best, highest ranked stocks in terms of value, highest ranked in terms of quality. I can mix them both and say value plus quality. There's something called momentum, where you're buying stocks that have moved the most. Why they move, you're not relevant about. You say कि देखो थोड़े से filter होंगे कि large cap ही खरीदेंगे, mid cap ही खरीदेंगे, जो भी है. But I will buy the top momentum stocks at any given point in time. And because momentum changes every 1 month or 2 months or so, I will change my stocks as well.
Right.
So when you have something like this as a base portfolio characteristic, it's called factor investing. That's one form of a quantitative strategy. There are any forms. Quantitative just means आप decision खुद नहीं ले रहे हो. I could say I want to buy this stock on every Monday and sell it on every Thursday. That's also a quantitative strategy. It's a stupid quantitative strategy, but it's a quantitative strategy. क्योंकि यहाँ पे you are not putting discretion. You are not saying कि यार ये Thursday ना ईद है या फिर नवरात्रि है, मैं नहीं खरीदूँ, मैं नहीं बेचूँगा. I don't bring that discretionary element into my portfolio. Therefore, I'm quantitative. I'm rules based.
Right.
So if you're by and large rules based, you're by and large quantitative as a portfolio. the most quantitative would be what you all probably have heard about, called index funds.
Right.
वहाँ भी थोड़ा डिस्क्रिप्शन होता है, because the index manufacturers decide कि ये स्टॉक इंडेक्स में नहीं होना चाहिए, जबकि अगर रूल्स आप एक्चुअली फॉलो करो तो ये स्टॉक होना चाहिए.
अच्छा.
कभी कभार वो अपने आप से डिस्कशन लगा देते हैं, लेकिन द फंड मैनेजर्स आर नॉट अप्लाइंग द डिस्कशन, द इंडेक्स मेकर्स आर मेकिंग द डिस्कशन. They are not the ones managing your money. Your money is being managed by the index manufacturer. The index fund manufacturer, index fund house. So they are not making any decision. They are saying the index में जो stock होगा हम उसी को लेंगे, उसी weight में लेंगे और उसको पकड़ के रखेंगे. So that is a quantitative portfolio by definition, because you are not making any discretionary calls.
Right. Understood. I think that makes it very clear. And I was very curious to understand this because it is less about discretion, right? AI has seeped into the system. How have you been able to adopt it? And also, do you see any immediate, benefits that would trickle down to retail investors because of it?
Why not? No. I think it's a very good question. I think there's two things in this. AI में situation ये है कि AI is a very good helper. If you know what you're doing, AI can help you very well in understanding what is wrong. So for instance, I could look at AI and say, यार मेरे पास ये पोर्टफोलियो है, इसको आप थोड़ा सा एनालाइज करके बोलो कि क्या प्रॉब्लम है and all that. It may be able to come out with a certain set of things that says, well, you know what, you got two funds that look exactly like each other. हर टाइम पे यही बिहेव करते हैं एक तरह के. So why are you buying two of these? Just buy one. And things like that. And there's more complexities, because then you have 40 small cap funds, 25 mid cap funds. You have built a lot of funds over time. It might say, listen, you have too many funds, so consolidate them together. It's all good when it says these things. But AI में problem भी है, because as we have seen, if you ask AI a question, you don't like the answer and you want a different answer, you can make it give it whatever answer you want.
Right.
So you just say, are you sure? Then it says, no, I'll change my mind. You say, are you really sure? Oh, no, okay, you're right. I thought this was a bad investment. No, it's a good investment. So that is the fundamental problem in AI today, and maybe it will get to a point where it starts making good decisions tomorrow. But at some point, you have to be afraid that it's a yes man or a yes woman in that sense, that you do not, it'll do whatever you want it to do if you decide that that's the direction to take it.
Right.
So that is one. I think secondly, the AI investor can benefit from the discipline. Because you get something that is not married to the objective or the outcome.
Right.
So it can give you, like for instance, if you ask me, should I get out of Capitalmind FlexiCap? I am biased because I run Capitalmind FlexiCap fund as a CEO, as long as we own the fund as a fund house. So obviously my first answer would be no. Why do you want to get out? Don't get out. So whereas the bias will not be there in the AI. Unless I program the AI, in which case I will tell it don't say no. But otherwise, the AI is programmed to tell you something unbiased and disciplined also.
Right.
So if you ask it, hopefully, if you ask it the same question 5 days later, it will have the same answer for the most part, if the reasons remain the same. If the fund is underperforming and it tells you that it's underperforming over 4 years and 5 years and 2 years and 6 years and all that, and then it tells you कि देखो बहुत ज़्यादा underperformance हो गया, let's go. But 5 days later, it shouldn't be like, it is underperforming in 2 years, 5 years and 6 years, but in 7 years, it is not underperforming. So you should consider holding it. Then you're like confused, यार पिछली बार तो तुमने 7 year का नहीं बोला था, इस बार अब 7 year का डाल दिया. So that's the problem that AI brings to the table. But so it's become like a human being also in that sense, because it can change its mind and all of that. The discipline cannot be maintained. It is not a systematically easy decision to make. So I would say that's where AI struggles, but otherwise you're fine. I think it's a great way for you to get a first level feeler. And if you really know your craft, you can tell it, ki dekho, I have too many funds. I know I need to eliminate them. Don't tell me which funds to eliminate. first find out what is the process that you will use to eliminate funds. So it'll go through and say, देखो इतने सारे हैं, ठीक है. And some of these funds were bought earlier, some of these funds were bought later. So I can't really compare CAGR on each one of them because they're different funds and all that. But I am going to compare maybe the underlying portfolios and find similarities. Or I'm going to say you have too little in some funds, only 1% or 2%.
Right.
क्या ही कर रहे हो उसको हटाओ. Or consolidate some of them into 5 funds of each type. Or you're not diversified enough. इतने सारे funds हैं लेकिन आपके पास सिर्फ equity है. What happens to your debt? What happens to your non-debt gold, commodities and all that stuff? कहाँ पे है? So now if the AI is built to program to understand this kind of a metric, then I think AI is a great tool. Most AI today is very horizontal and broad. So you really have to struggle to make it understand your context. But once you make it understand your context, then it's easy. So you make a sub AI tool of some sort.
Right.
I'm only the portfolio assistant. Then I think you can get a good deal out of it. So love to see more of this as it goes along. I found that in general it is a horrible indicator of when to invest in stocks. But ठीक है.
Fair point. I completely resonate with all the points that you just made. I'd probably add this why I wanted to ask you this question. I was hopeful that you'll give me an answer that says, you know what, AI has eased so much of our research work that I'm going to reduce the expense ratios now.
No, I wouldn't mind. See, expense ratios are hardly a function of what it costs me. I just being very honest as a fund. The cost of any product has nothing to do with the cost it takes to make that product. So you go to a restaurant and you find a dish at 200 rupees. It didn't cost them 200 rupees to make that dish. It cost them 70 rupees. Yeah. और जो बाकी सारा जो रेशियो है, it is a profit in some cases, a loss in some cases. You ask a restaurateur, वो बोलेगा यार मेरा ना सबसे ज़्यादा profitable dish item alcohol होता है. Because I mark it up 3 times and you know I know what it costs.
Yeah.
Food में क्या होता है? Food में wastage भी होता है. So I make 60 kgs of onions, but only 20 gets used. So मैं बाकी 40 का क्या करूँ? फेंकना तो पड़ेगा. तो वो वेस्टेज हो गया. लेकिन मैंने डिश के हिसाब से सिर्फ 2 अनियन लगाए थे, तो आप डिश के लिए आप 2 ही अनियन लगाओगे. मैं तो कहता हूँ मेरे को 6 अनियन लगाना क्योंकि वेस्टेज भी तो है. तो it is basically once you come across into the, so then you ask him कि आपके 200 रुपए का प्राइस कैसे आया? मतलब आपने 30 रुपए का बोला, 40 रुपए का बोला, फिर आपने बोला कि शायद उसका 2 गुना हो सकता है. आपने 200 रुपए क्यों लगाया, उसको 300 रुपए क्यों नहीं लगाया? He'll tell you this straightforwardly. Customer will pay 200 rupees. That's why I charge 200 rupees.
Right.
Your prices on the product are a function of what the customer is willing to pay you. It's not a function of how much it costs you. Which is therefore, if I can charge a lower fee, I already will.
Right.
If the fee was the differentiator that made you choose me rather than choosing my competitor, I would lower my fee the first day itself. Unfortunately, you don't. You rank people on returns, not on, and returns are after my fees.
Fair.
So if my returns after fees are better than anybody else, and my fees are double everybody else, you will still choose me.
Yeah. Right.
Because post fees, I'm able to give you a better return, right? So even if I used all the AI in the world and I was able to reduce my cost to 0, I won't think I will reduce my selling price if my returns are great. In fact, I will use AI and make it cost me more than the humans I have if I can get better returns.
Absolutely.
Because my cost may go up 10%, my returns may go up 20%.
Worth the investment.
I don't think there's a function of us, but yeah, I mean AI is terrible in selecting stocks. It's great for building thought processes. It's great for building portfolio analysis processes. Even for us, it helps us build a lot of compliance tooling. It helps us build a lot of marketing tooling. But it is not very good in if I give it a bunch of stocks and say, pata karo kaun sa stock kharidna, it'll tell me some stock. We'll be like, dude, we're not buying this shit. So, because, I mean, the difference between what we do and what AI does is this. I can tell you why we selected certain stocks. I can go down the value chain and say, इसलिए हमने खरीदा था. AI will give you bullshit answers about why, because AI is not necessarily a linear path. It is a neural net at some level. It uses weightages. By and large, you know that something has caused weightage of something to go up. But it isn't necessary that you know why this stock was selected over everybody else.
Fair.
And therefore, it's not very useful from a decision-making standpoint. It's useful from a decision support and tooling standpoint.
Fair points. Yes, absolutely. All right. Now what I'll do is I'll move on to the next part where I'll talk to you about a few myths. These are like widely held misconceptions that are costing a lot of Indian retailers a lot of money. So I thought we'll bring this up. I'll probably add a little context or ask you a follow-up question on that, right?
Done.
Perfect. So the first myth is I can consistently generate 12 to 15% in equities, right? There's you've straight out called it the 12% myth, and so many fund managers, advisors throw around this 12 to 15% range of returns to be expected as though it's a law of physics. But what exactly is fundamentally wrong with this kind of thinking?
So yeah, Anup wrote that article, not me, but the 12% myth is just this. It sounds very interesting. It sounds high enough to be attractive, but not so enough that it's unbelievable. But you have to understand that for the most part, returns come from economic growth. Economic growth doesn't have to be linear, ever. That means 1 year you can grow at 7%, another year you can grow at 17%.
Right.
Your average also may not add up to 12. Because there are fees, there are transaction costs, there are a bunch of other things that happen.
Right.
Second, what is economic growth? Economic growth is how much the country grows by plus inflation. That means if as a country I'm producing 100 things, I'm producing 105 things the next year, then I'm producing 5 more things. But if each of those things costs 10% more because of inflation, then I'm actually producing 105 into 110 rupees, which is 15% higher than last year.
Right.
But those 15% with 10% inflation. Now, if inflation comes down, right now it's 3%, less than 3%. So if inflation comes down to 3% and my growth is 6%, then I am actually growing at 9.
Right.
9 is not so attractive. 9 is not 12. So by and large, we found that you should keep a lower number because India will not grow at 8% anymore. And inflation will not be 6% anymore. When inflation was 6%, India was growing at 8%, you're talking 14% growth.
Right.
Where it was easier to say 14% ban jayega equity mein and all that. But also it's not linear because some years will grow more, some years will grow less. But I think over a 10-year period, you should expect that you will grow at economy plus inflation, that kind of a growth, which can be between 7 and 11% or so in the next 10 years. So I'd say you have to readjust to those lower levels.
Right.
And the 12% myth is sad because at some point it relates to the way that when you think about a person getting an annual hike, the minimum you expect to give is 10%, right? As an employee, you expect at least 10% hike. Now this 10% hike may not come if inflation is very low. Because अगर same ही job कर रहे हो, you're not going to get 10% hike.
Yeah.
Like if you have a Bartan Manjo fine maid, you are probably, unless your area is devoid of people, you have not enough people who can come in as maids, you're probably giving 4 or 5% increments on a yearly basis. If people ask more, you say, okay, you go, I'll get somebody else for this place.
Yeah.
Because demand and supply are kind of linked to each other in that sense. But at the same time, as software people and all, we'll go to our bosses and say, boss, minimum to 10%, 30% दे सकते हो भी दे दो टाइम. So the expectations are different because supply and demand characteristics are different. However, I feel that all of these expectations should come because inflation is low. And if inflation is lower, then people will get lesser hikes. People will expect lesser return growth. Even your FD is now giving you 6% rather than the 9% it used to give.
Yeah.
So you should expect the stock market will also give you this.
Right. And this, like you mentioned, it would fluctuate. So there's no fixed number every year that one should think
It
about.
is if you invest in like a liquid fund or something. वहां पे तो हो सकता है कुछ कर, but इसमें नहीं होता है. मुश्किल है, and you don't want it also. Because if they fix it, that means there's no more upside.
Yeah. Fair. Yes. All right, I'll move on to the next myth. Active fund managers have inside information and can beat the markets. This, the reason I smiled is because it is a little funny to me, but I'd love to hear what your thoughts are on it.
नहीं, it makes us sound like Superman, so we're fine with this. मतलब हमें बनाओ, चने के झाड़ पे चलाओ, ठीक है. कोई नहीं है inside information, किसी के पास नहीं होता है. ये तो पहले वाला बकवास है. अभी जो now there is, it's more difficult to trade on inside information. It's illegal also to trade on inside information. But more importantly, like we're in Bangalore, people told us, आप बैंगलोर में कंपनी खड़ी कर रहे हो, अपने मतलब बैंगलोर में एमसी बना ली, आप कैसे करोगे इंटरव्यू, आपको खबर कैसे आई? यार आपको खबर कैसे आती है कि दिल्ली में कुछ हुआ है? कोई आपको व्हाट्सएप भेजता है ना, तो मतलब, और ये न्यूज भी तो आता है हर जगह, there's some news article, there's some news something. तो ये कौन सी बड़ी बात होगी अगर मैं बैंगलोर में हूँ वर्सेस समवेयर एल्स हूँ? खबर इज नो लॉन्गर एन एडवांटेज. जो तुम्हारे पास खबर है वो शायद 15 लोगों के पास है. एंड अगर मैं ऐसी खबर ढूंढ लेता हूँ जो सिर्फ मेरे को पता है क्योंकि मैंने मैनेजर के साथ गोल्फ खेला था, सभी मेरे पीछे पड़े कि अच्छा तुमको पता था ये, तुमने गोल्फ खेला था उनके साथ, तो तुमको पता था ये मर्जर होने वाला है, तो तभी आपने स्टॉक खरीदा. आप एक्सप्लेन करो. आप एक तो वो है. सभी ने अभी रिसेंटली में काफी they have gone after a few people who tried to act on insider information and got caught. There's no point risking your career on something as stupid as that.
Right.
But मैं कहता हूँ सारा जो खबर है वो न्यूज के अंदर और प्राइस के अंदर होता है. आप देखते हो कि अगर स्टॉक नीचे गिरने वाला है, उसके 15 दिन पहले स्टॉक गिरना स्टार्ट हो जाता है.
राइट.
रिजल्ट आ गया, बुरा रिजल्ट था, लोगों के पास अगर खबर पहले थी तो एक्चुअली प्राइसेस गिरने स्टार्ट हो गए थे रिजल्ट से पहले ही, क्योंकि उसके ऑडिटर को पता है. वो ऑडिटर में घर में जाता है, अपने भाई को बता देता है यार थोड़ा सा गंदा है. तो भाई कहता है मैं ऑडिटर को जानता हूँ, उसने बोला है मेरे को, तो मैं इसको बेच दूंगा आज. अब इस हर चीज को थोड़ी, मतलब यू कैन नॉट ट्रैक एवरीथिंग.
राइट.
And eventually, though, of course, it is a matter of time before I think eventually SEBI also catches all these things. But a lot of times, this cover is just non-existent. In fact, more of the times, people get surprised. अगर मैं promoter को जानता हूँ, promoter तो मेरे को थोड़ी बोलेगा कि कुछ बुरा होने वाला है. Right. वो बोलेगा कि अच्छा होने वाला है, ये तो फंड मैनेजर है, ये तो बेच देगा मेरा स्टॉक, मैंने उसको बोल दिया तो बोलेगा सब कुछ अच्छा है, ठीक है सर, कोई प्रॉब्लम नहीं है. और मैं कहता हूँ कोई प्रॉब्लम नहीं है, तो वो प्रॉब्लम होता तो मेरे को बताता ही है. अगले दिन प्रॉब्लम हो गया, तो मैं फोन किया कि सर आपने मुझे पहले क्यों नहीं बताया. तो उसने बोला यार मैं बताता तो बेच देता, तो फिर मेरी बेइज्जती हो जाती. तब क्या करोगे? खबर तुम्हारे पास इसलिए नहीं थी क्योंकि तुम फंड मैनेजर, वो शायद किसी और को बता देता. तो ये भी है.
Correct.
In that sense, you are a victim, and this thing, if you're too friendly with management, we choose not to be friendly with management or unfriendly with management. We're going to analyze every data through a computer-based view. Right. Some part of it we may have to take a discretionary call. We'll take it when that happens, but it doesn't mean that we will, be so pally with management that management doesn't tell us the bad news. This खबर सीरीज आई थिंक, एंड आजकल क्या हो गया खबर मिल गया तो आपको अगर पता होता है इंडिया पाकिस्तान के बीच में वॉर होने वाला है, what would you do? Would you short the market? Within 3 days, you would have lost money. Because the market recovered in 3 days. अगर आपको पता होता कि एग्जिट पोल गंदे आने वाले, तो एग्जिट पोल का जो इम्पैक्ट था एक दिन in 3 days you were back again.
Right.
So unless you want to make money that one day and you tried stunts on it, that was one thing. But the khabar is not meaningful for a long time. Sometimes great results, company stock falls short. Bad results, company stock goes up. What will you do having that khabar?
Fair. Absolutely. Fair point. Yeah. There's probably one uncomfortable question that I'll ask, right? If quant strategies work well, right? It's in your experience also, obviously it's worked well. That's why you continue doing this. What is stopping traditional fund managers adopting this approach?
It's a very good question. I'll tell you why it's a very good question. Because the correct answer to it from my side is no, they don't work. So nobody else should try this. There's a reason I have to say that, because if everybody tried it, they won't work. And therefore, what works for me will obviously start working for everybody, and therefore it's a wrong case. But there's a story of this professor and another person looks at it and looks at the road and says there's a 100 rupee note on the road. The professor says, no, it can't be there, because if it was there, somebody also picked it up. So the guy picks it up and says, okay, now there's no 100 rupee bill note on the road. So the question to you is not more, or to me rather, is not about whether because quantitative strategy works, does everybody not follow them? Is that it is not easy to follow them and find those opportunities. And even if it is in plain sight, the visibility of a strategy does not mean that a person can have the discipline or the desire to follow it. I'll tell you run a quantitative strategy, it tells you sell ICICI Bank. So this guy says, boss, I have met Bakshi 5 times, I am not selling ICICI Bank. अब वो करोगे तो क्या फायदा? शायद ICICI बैंक टेम्पोरली वीक हो 3 महीने फिर इसीलिए आपको बेचने को बोला, और जब वीकनेस खत्म हुआ, then maybe the thing will tell you to buy. If it's a correct kind of a system, it may have a discipline around buying and selling. You have to listen to it. But if you sit and override all this stuff and say, then you'll say quant is useless. Because you'll say, अच्छा इसने बोला ये बेचो वो खरीदो, और जो उसने बोला खरीदो उसमें से एक स्टॉक नीचे चला गया. How does it matter if I tell you to buy 5 stocks and one stock goes down, but the remaining 4 stocks did remarkably well? By law of averages, I'm fine. I've done a good return. But you may look at the one stock that's fallen down and say, देखो ये तो waste है. So I think it's a mentality issue and a discipline issue also. And it's what people are comfortable with. See, the market is not like there's no single way to make money in the markets.
Right.
Many ways.
Right.
Because of that, you can make money by doing the exact opposite of what I have to say. I'll give you an example. There's a guy called Jim Rogers, who's a player that goes short a lot. There's Warren Buffett, who doesn't go short a lot. Both Jim Rogers and Buffett have made billions of dollars in the markets. How can they both be right? The answer is, sometimes you go short because you go short a good company also because the markets are weak. So you will take those opportunities when they come. So your shorts taken at the right time can generate as much money as long-term long. So I could be long on a stock from 100 to 500 rupees. There may be another guy who's short on the stock only in pieces, bits and pieces. 200 से 100 चला गया, 300 से 100 चला, 150 चला गया. So हर ड्रॉप में उसने पैसे बनाए, सिर्फ ड्रॉप में बनाए, लेकिन स्टॉक 500 तक पहुंच गया है. तो कौन गलत होगा? दोनों सही हैं. So sometimes the opposite of a good strategy is also a good strategy.
Right. Very well said. I think that's something I'm going to write down in my book for sure.
It's not mine. Somebody else quoted this, I'm sure.
अच्छा.
The opposite of a good saying is also a good saying. ऐसा कुछ है. So I wrote this once. The opposite of a good strategy is also a good strategy.
Interesting. All right, I'll move on to the next myth. Higher risk always means higher returns, right? We have low volatility strategies जिसमें return भी थोड़ा कम मिलता है, सबको पता है ये बात. Sometimes there's this paradox, right? Sometimes less risk is actually for a better outcome. How would you explain this?
So this is very interesting. Like I keep saying this. Sometimes we equate risk to the wrong things. We equate risk to volatility, and that's not correct. अगर निफ्टी नीचे 30% गिर जाता है, it doesn't mean it is more risky than something else which doesn't fall 30% at a time. In a 1 year time frame, a fixed deposit is less risky than Nifty. In a 20-year time frame, the Nifty is probably less risky with higher returns than the fixed deposit. Because fixed deposit returns keep changing also.
Yeah.
Nifty's returns actually converge to economic growth over a long time. So you might actually find that based on the time frame, the risk return reward is very, very different. Now, the same thing I would say, there are lots of strategies where rewards are lower because risk is lower. But sometimes because of that, your end amount can be higher. So why is there so much concentration? About 30,000 crores coming into equities every month. When 500,000 crores per month is added to FDs, well, not added, but renegotiated in FDs every month, let us say. So because FDs are relatively low risk, but people put more money behind.
Yeah.
If I have 500 rupees and you tell me to divide it between an FD and equity, maybe my answer will be different, but to a lot of people it will be like 400 रुपए FD में डाल, 100 रुपए equity में डाल. अब 400 रुपए पर आपने 8% कमाया, आपने कितने कमाया? 32 रुपए. 100 रुपए पर आपने 20% कमाया, आपने कमाया 20 रुपया.
Right.
तो equity से आपने कमाया भी तो कम, because you didn't allocate appropriately, right? So you earn more. So it is actually possible that you earn more returns simply because you have more investments in a low risk asset than a high risk asset. And then last bit is that low risk doesn't mean low return. Sometimes a low risk strategy can give you a high return. You have arbitrage. Sometimes the arbitrage itself can give you a 20% return. ना तो नहीं बोलोगे. अभी recently we used to run a research service, and in that research service in 2017 and 18 we used to run these buyback strategies.
Right.
A buyback strategy was simple. 2 लाख रुपए का स्टॉक खरीदो और उसको टेंडर कर दो बायबैक में, और आपको जो भी आता है, typically buybacks were 30% higher than the current market price. You can hedge out the by going short the future, you can hedge out any downside risk also. And you could earn 30% on half your portfolio, and remaining 30% would be break even.
Right.
You could earn 15% on a portfolio in 3 months. 15% in 3 months is like annualized 60%.
Right.
Now, who would say that's a bad strategy?
Yep.
It's not a low return strategy, but it's a relatively low risk strategy.
Right.
Now, it stopped working because too many people jumped into it. But उस time पे नहीं था.
Right.
So we were able to do this for a long time. Sometimes low risk and high return is possible. Sometimes high risk and very low return is also possible. That's because high risk है तो मतलब zero भी हो सकता है, negative भी हो सकता है, right? But we accept that. But I don't think we accept meaningfully कि low risk में high return हो सकता है. The answer is sometimes yes, it can happen.
Right. Understood. To follow up on that point, right? 90% of retail folks lose out money in F&O, whereas you've run an arbitrage fund, and I'd love to understand what is it that differentiates systematic strategy from speculation.
Now, what is the difference between an arbitrage strategy and, so I think of it as, okay, if I gave you a car, you can use it to drive really fast and have an accident. You can get excitement out of driving really fast, and one day you'll have an accident. ठीक है, one day. But बाकी दिन तो मैं खुश, मतलब, driving really fast. Or you can use it to transport yourself from place to place. And you can use it to shield yourself against बारिश आ गई तो मैं गाड़ी के अंदर हूँ, I'm not going to get wet. Right? Or if there is a hail or a storm, and cars are safer because you have seat belts. In fact, the car is probably safer place to be than the footpath.
Right.
Because something can run over you, an animal can attack you, whatever it is. So you're using it for safety, that's also fine. F&O is like that. You can use it as a weapon of mass destruction, or you can use it as a weapon to protect yourself. So what do you do? What we do in an arbitrage fund is we buy a stock short the future. अब क्या होता है, स्टॉक अगर ऊपर चला जाता है तो whatever it goes up, the stock makes the money and the future loses the money. Same exact amount.
Yeah.
And the other side also, stock loses money, future makes money. So I don't net lose any money when the stock moves up and down. How do I make the money? I make the money by the difference between the price I enter the stock and the difference I enter the future. If I buy at 100, sell the future at 101, I'm always making 1 rupee no matter which side the market goes.
Right.
Because the 101 will converge down to the 100 eventually. So that means I will make this arbitrage money no matter what. It doesn't matter where the market goes. So I should be happy if I'm able to make that 1 rupee regardless. Here there is no speculation. I'm actually betting on the only thing that can happen, which is convergence, and the convergence is guaranteed to happen because that's how derivatives work.
Right.
So I am actually not trying to go over leverage, speculate and all that stuff. Whereas a person who's using F&O saying, "Kal 2 rupiya upar jayega. Instead of buying one contract, let me buy 10 contracts." And then tomorrow it falls 6 points and then you're finished.
Yeah.
So that's the speculative part of it. We don't do all that.
Right.
So we use it more responsibly in an arbitrage fund. We use it to reduce risk, not increase it. In fact, that's why arbitrage funds have relatively low risk compared to stocks.
Fair. All right. I'll move on to the last myth. Diversification means owning 10 to 15 mutual funds. This is something that I've also observed. A lot of people own 10, 15 mutual funds, 40 stocks, and they think it's a way to diversify, right? For someone who's building out their strategies, how would you think they should think about it? Because exposure ends up converging at 80% similar exposure, right? How should they make a conscious effort to build it out?
So I think diversification is about how many different types of approaches or instruments you have. Now we have a multi-asset fund coming in. We are actually saying that we will be a multi-asset fund that invests in equity, InvIT, REIT, bonds, government securities, gold, silver, copper, crude oil, natural gas. There's a lot of instruments, right? So you actually have a lot of uncorrelated, different things. When equity goes up, gold may go down, gold may go up, equity will go down, bonds may go in a different direction at different points in time. When the market is really bad, everything will go down, but crude oil will go up. So you have something or the other in your portfolio that's balancing something else.
Yeah.
And that is a truly diversified kind of portfolio. Within equity, as you say, okay, Deepak, are you selecting only large cap fund? I'm saying, no, I'm selecting bit of large cap, bit of mid cap, not so much small cap.
Right.
And then bonds, what are you buying? I'm buying AAA bonds of corporates and government bonds and state bonds. REITs I'm buying. So I am actually diversifying them across a very large set of different types of instruments.
Right.
So when I have instrument diversification, I have one layer of diversification. If you buy 5 funds, all of whom are large cap funds. That is not diversification. You're buying large cap equity funds, that's all.
Right.
You're diversifying कि यार ये fund house अच्छा नहीं करेगा, वो fund house अच्छा करेगा. The selection criteria may be different. But if you map that criteria over the last, let's say 15 months or 20 months, and you find that overlap is more than 75%, then you're not even getting that diversification. You're getting the same thing.
Yeah.
So you say, okay, forget it. Let's now diversify in terms of some large cap fund, some mid cap fund, some small cap. Or you buy a flexi cap fund which keeps changing between large and mid and small.
Yeah.
Now you might say multi-asset, Deepak, तुम तो कर रहे हो, बाकी लोग भी कर रहे होंगे. The answer is no. Some multi-assets are buying only equity और उसको भी hedge कर रहे हैं. Debt को भी hedge किया जा रहा है, commodity को भी hedge किया जा रहा है. They're treating multi-asset as an arbitrage product and running it as an arbitrage fund. Very different approach from us.
Right.
You could actually have the Capitalmind multi-asset fund, which is a very dynamic, across the spectrum commodity exposure plus other exposure, to another fellow's multi-asset fund, which is purely like arbitrage.
Right.
You're actually getting diversification from there. One debt, one equity kind of equity plus other commodities kind of product, right? So you might actually get that diversification. So it's not the number of funds, it's the number of approaches that you're looking at.
Right.
We have a quantitative approach in our flexi cap fund. Another fellows are diversified, but let's say a flexi cap is more a discretionary approach. They buy long-standing stocks that have been there for 10, 15 years. They love the stock, they've met the managers and so on. So they buy those stocks. We, on the other hand, buy stocks using a quantitative thing where the algorithm keeps telling us buy this stock, sell that stock. So today's portfolio will be very different from after 3 months. So I may be large cap heavy today, tomorrow I'll be small cap heavy, then I'll be mid cap heavy. So I'll keep changing. So if you have both these approaches, you are diversified in approach, even though they both fall flexi cap funds. So the approach diversification is another layer. Instrument diversification, approach diversification, and then fund manager diversification. We're saying I don't want to bet everything on one fund house. So I do another fund house to say that maybe different approaches will work from the different fund houses themselves. So those kind of diversifications is what you can pick. But sometimes, regardless of us doing all of this, you still end up with a very concentrated portfolio because all the fund houses are doing the same thing. Right? So I would say that is a problem sometimes if you have this thing, but it's not about the count of number of funds.
Right.
For instance, having 80 stocks is not saying you're too diversified. Sometimes you need 80 stocks.
Right.
And you find out that even if a portfolio has 80 stocks, 25 stocks make up for 80% of the portfolio. फिर बाकी तो sort of long tail ही है.
Right.
The long tail can be as much as you want, but it's only 20% of your portfolio. So what difference does it make? It's not going to make a significant difference to returns if it's 100 stocks or 5 stocks.
Fair.
So I would say then let the manager do what they want as long as so a 25 stock with 80% allocation to the 25 stocks is actually a concentrated portfolio, not diversified. So I would say that is one of the challenge that kind of adds on to the underlying challenge of diversification itself. I think the idea would be look at the approach, look at the number of instruments, independent equity, may large cap, mid cap, small cap, then InvITs, REITs, bonds, commodities. Do you have all of these elements in your portfolio? Then you buy the right kind of fund.
Got it.
So I would say that is your approach. It's not meaningful to say it's, but I mean, I'll say this quite unfortunately is that a lot of funds are very similar.
Right.
One will call itself a business cycle fund. Another will call itself a flexi cap fund. But if you see the portfolios are very similar. That is not diversification to buy both of them. You can buy one of them. It's the same thing.
Fair.
But there could be another fund which calls itself a thematic, dividend yield fund. So the dividend yield fund may have a very different fund choice of stocks than a flexi cap fund.
Right.
Because dividend yield is very boring stocks, flexi cap will be more interesting stocks which are growing. So you get to marry both of them. So you get that as a diversification criteria. So it's not so much the number of funds. So it's the nuance here is the number of approaches, the number of instruments. That's make the difference.
Got it. Interesting. I think that adds the part where you explain the entire way of how you need to think about an approach for diversification. That's a very interesting perspective. And yeah, I think I'll just a few closing comments. I'll play a quick game with you, rapid fire. You can answer in a word or a sentence, right? So the first thing I want to know is the best investment you ever made.
Possibly a company called Power India bought at 900 rupees in the PMS in 2020, and by 2024 it was 16,000 rupees. So it was not bad at all.
One stock you'd never touch.
That's a good question. Most of the stocks I won't touch are bankrupt. The ones that I won't mention because they'll sue me. So I think I could easily now say I wouldn't have touched a DHFL because it's bankrupt. But I really didn't like the stock at some point.
One fund house you respect the most.
Parag Parikh for sure. ICICI also for its vision and scale. Both of them are brilliant houses.
Right. Your biggest behavioral bias as an investor?
Survivorship. We always look at what is there currently. We forget the tons of people who have died along the way. तो लोग कहते हैं कि यार ये स्टॉक तो मैंने खरीद लेता अगर 10 साल पहले विप्रो खरीदा, क्या था वो एमआरएफ खरीदा होता 1980 में, तो मतलब चांदी हो जाती, करोड़पति बन जाता है, ऑल दिस इज यार 1980 में तो परशुराम पुरिया सिंथेटिक्स भी तो अच्छा कर रहा था शायद, तो आपने किया क्या, मतलब वो तो जीरो हो गया फिर।
हाइंडसाइट में काफी चीजें ऐसे लगती है कर लेनी चाहिए, बट यार
मतलब मैंने अगर लैंड खरीदा होता जयनगर बैंगलोर में मल्लेश्वरम में तो मैं तो बड़ा रिच हो गया होता, पर मेरे पास कोई पैसे नहीं था लैंड खरीदने के, तो भी फायदा क्या है, और मैंने किया नहीं ना, और मैंने फिर सेम ही चीज अगर कहीं और की होती तो शायद मेरा लैंड का वैल्यू गिर भी जाता।
One book every investor should read.
Good question. There's a book called What Goes Up. Very मतलब प्रोज ही है, कहानियां हैं, लोग बोलते हैं. I think there are conversations about various things that have happened from the 1920s to the mid 2005 or 10 or something like that. तो वो जो कहानियां हैं, it has come in the conversations, the person talking to all of them. So the things they say in that book, you find out that the markets never change. So I forget who the writer is, but What Goes Up is a brilliant book.
I'm making a note of it. Yes. Done. I think perfect. I've gotten all the answers. Just one parting thought, right? If someone's heard our episode fully today and they understand that 12% returns is a myth, what would be your one message that they should do this week as an investor?
So I think, if you've heard me or this thing, you'll probably guess correctly, is that don't rush to do anything this week. The main thing you should do is be comfortable in what you do. Remember this, okay? Your life is not about making your money through mutual funds. Your first crore comes through your income. If there's anything you ever want to take away from what I say, focus on increasing your income. Forget about increasing your returns from the mutual funds you own. But once you do that, once you've got a reasonable performance, maybe you should consider diversifying your portfolio even beyond India. Our multi-asset fund will actually, once we get SEBI RBI limits opened up, we'll try to invest outside India as well, because we want more diversification. So you should actually consider more diversification in terms of investing abroad, or few other things that you can do in your investing journey, rather than focus on this fund is giving me 1% more return, that fund is giving 1% less return. That kind of thing. So build a standard investing strategy and stick to it. Even if you're confused, don't buy the equity funds, buy the hybrid funds, balanced or multi-asset or something like that. If that also scares you, buy like the liquid funds. It's okay. As long as you have build up yourself a investing habit, that's fine. But I think for the most part, you should try to do less with your investing life and more with your real life. Our tagline at Capitalmind is to win at life. That means you should win at life. Investing is not winning at life. Investing is a path to finding out how much you need to pay to win at life and paying it, because that's what you're saving your money for.
Right.
अपने बच्चों को देने के लिए थोड़ी दे रहे हो, बनाओ और खाओ और enjoy करो. That is the core message that I think everybody should take home. So if there's one thing you want to do this week, I don't know, go exercise, play some pickleball, do some dance, climb some mountain, and then worry about your investing life. I'd be happier if you did that, because I think that will energize you more to eventually earn more and eventually do more things with your life. But it's a long answer, but the shorter answer is don't worry too much. Just keep it very simple. A lot of this F&O stuff may be beyond you. You don't have to do it. Just keep your life a lot simpler than the internet makes it out to be.
Perfect. I think this is exactly what I also needed to hear. Thank you. This has been a very, very great conversation for me. And I'm looking forward to catching up with you soon. So
thank you, Deekshana. Looking forward as well. I mean, you come from a neck of the woods I used to call home a long time back. So I'm looking forward to catching up with you. I wish you all the best. I know that you are a young and fledgling startup. I wish more of you. We see a lot more of you going forward. I hope a lot more people benefit from your technology, your science, and your advice. And that if you need anything that I can help with, I'm always here and we're happy to help.
Perfect. Thank you so much. And likewise, if there's something I can help you with, please do let me know. And
I will. Thank you.
That's Deepak Shenoy, engineer, trader, and algorithmic pioneer. He's someone who manages thousands of crores, not using guesswork, but actual facts. Today, we handed over the truths to you. Not the truth that sells products, but the truth that helps you build wealth. Here is a small exercise for you. Why don't you go back to your portfolio today, try to understand the funds you've invested in, the actual returns you're making, the real XIRR, not just a guess, and also which of the funds are doing the exact same thing. This small exercise will help you gain a lot of clarity. There is no revolution coming, it's already here. It's either you're a part of it or you're paying for someone else to be a part of it. Until next time, this is Money Without Myths, signing off. Bye-bye.